Hey there, Ken Zorvich, NFM Lending. Hope you're having an excellent start to your weekend. So, you may have seen in the news, or at least some sort of email that had come out to you about Trump's request for Fannie Mae Freddie Mac to purchase $200 billion of mortgage backed securities. Okay, so let's talk about what this means and can this really help mortgage rates? So, just to take a step back for a second, every mortgage when it closes gets purchased by an investor. The biggest investors that purchase conventional loans are Fannie Mae, Freddie Mac. They buy a bulk of them. Ginnie Mae buys FHA and VA loans. Then what they do when they buy this portfolio of loans is they securitize it and they turn it into an investment instrument called a mortgage-backed security, which is like a bond at that point. So if they have, $100 billion that they purchase, they now securitize that and people can go buy mortgage backed securities and it's like investing in a bond. And then moving forward, once they have this investment instrument, it does help dictate what happens to mortgage rates. Okay. So, meaning if there's a big surge in purchasing mortgage backed securities, that demand can drive down mortgage rates. If there's no appetite for it, and in fact, people are selling off those, that sell off can cause mortgage rates to rise. Okay, so mortgage backed securities and the 10-year treasury are two very, very good indicators of which direction mortgage rates will go because of their activity. Okay, so Trump told Fannie Mae and Freddie Mac that with the profits that they've earned off their portfolios, to then reinvest in the mortgage backed securities. Now, he wanted to do this because he wants to push mortgage rates down. Now, the question is, will this really help? So, in the short term, the answer is yes, it could help, right? Anytime you have a big buyer in the market for that type of investment, well, guess what it's going to spark? It's going to spark other buyers that want to go in there and buy mortgage-backed securities as well, because now there's a demand for them, right? And so yes, so you could see some uh, some demand in that market that'll push rates down. The question is, will this have a long-lasting effect? Now, this has happened before in other times that have pushed rates down, but for example, when the Federal Reserve or the Treasury did this, they buy $1 trillion. Okay, so quite a different amount. And this is what the Federal Reserve was doing during COVID to push rates down. They would buy mortgage backed securities and 10-year Treasury notes to artificially push down mortgage rates. So, in the short term, yes, this could help. I just don't know that it'll be a long term solution. Personally, I'd prefer to see the market organically get us down there. I don't like it when we have to use these type of tactics to influence mortgage rates. I'd rather there be more demand from the market. And honestly, the market has been very skittish on things like 10-year treasuries and mortgage backed securities right now because of monetary policy. Okay, so our government is currently in debt about $38 trillion, which means every year we print more money than we're earning. Okay, so if we need to spend say 7 trillion but we're only earning 5 trillion, that's 2 trillion that gets added to the deficit. Where does that 2 trillion go? It goes into 10-year treasuries. And the bond market is skittish about where is this all going, right? Because our GDP is down at the start of last year, and now the solution is to print more money. So whichever political party you want to affiliate with, we can all agree they're all spending way too much money, and no one's had a chance to figure out how to get it down. Now the current administration's trying to do that with tariffs, so that could help interest rates because it might mean less money we have to borrow, and that might mean less bonds coming to the market because if you saturate a market, it's hard to get the yields down, right? So listen, my advice to anyone, whether you're a current mortgage holder that thinks you have a high interest rate, or you're thinking about buying, could you see some initial relief? Yes, it's worth inquiring about. Okay. And see if you can get into a little bit of a lower rate to ease your payments. It's definitely worth inquiring. Will it have a long sustaining drop in interest rates throughout the year? That's yet to be determined. So, listen, if you have any questions on this, please feel free to reach out to me. Make sure you get in some time with some friends and family this weekend. And as always, I'd love to be in this business in 5 years. If you know someone looking to purchase or refinance, please think of me. Have a great weekend.